about money with your AFC team, Mike and Al, on AM 1300 The Answer. For more information, click on adamsfinancialconcepts.com.
So, we're talking about the U.S. dollar and a potential competing currency. The dollar, 96% of all trades in the world, and there's over $4 trillion per day, 7 days a week that's happening. All that's done in dollars. And there are countries now that represent somewhere between 30 and 50% of all trade that want to talk about a competing currency. They want to talk about it and see how it would work. And when we left off before the commercial break, I started to discuss and people have described it as a sewer. I don't know that that's the appropriate thing, but you think about all the pipes that are feeding in, or you could think about it as a network, almost like the internet with one central hub in New York City. And all the information travels over the fiber optics network. It all travels over that kind of system. And what we're seeing in the world is people looking at how they could replace that. And certainly they're not going to replace a new fiber optics network or come up with a new hub. But there are things that they could do. Following the meeting with Vladimir Putin in Moscow, Xi Jinping went to what's called the Shanghai Cooperative Organization. Uzbekistan, Kazakhstan, Kyrgyzstan, Tajikistan. Russia wasn't there, but China is also there. They're actually trying to do trade in local currencies. And each one of those countries has their own local currency. It's not working very well. But think about this. What Iran proposed was a common currency. And I think we've seen some aspects and seen some studies done of using cryptocurrencies. Now you don't need a central hub like New York City. You just need a currency which has some sort of backing or the backing of all those countries.
Well, they talked about backing precious metal. You know, gold. And that brings me to a point, Mike. We've seen gold almost hit an all-time high. Gold, I think it's $100 or something short of an all-time.
Yeah.
I don't know about other precious metals. It could get interesting in that market. What happens if they decide to do that? The precious metals in China does have a good lock on significant resources.
And when you look at the rest of the countries that are discussing it, they're almost all natural resource dependent, or that's what they ship. I mean, you look at Saudi Arabia, Qatar, UAE, all oil countries. Qatar, you look at Egypt and Myanmar.
And that's, you and I discussed, was it a coincidence that, we have this chip war going on with China where we're not selling them chips?
Yep.
And then we have this incident with TikTok where the U.S. wants to ban TikTok. And then a week later, we know the relationship between the Saudis and China is getting really strong, and we see oil production, decline.
Oh, I think that's...
And China's their biggest customer, which is interesting. But I thought it was a kind of a coincidence. I didn't think it was a coincidence.
It may not be a coincidence. It may be, I mean, China feels that the United States is being a bully right now.
Yeah.
When China is taking advantage of the U.S., they don't see it that way. But when the U.S. is reacting to China and doing the CHIPS Act, China feels that they're being pushed around.
Well, and there was some studies I read that said that this chip thing, it could have worldwide global consequences in the sense that if we do these, worldwide GDP is going to shrink. And that's a consequence. Okay, if we can't export some of our goods, that's going to cause a problem. Where are the stocks that you and I like to pick? Which ones are going to do good if this is the world we're going to be living in? And that's the main reason of the show, right? Where are we going to go with this? Is that where are you and I going to put the money if, looking at how the world is changing?
And if there's a new currency, a competing currency, that really has an impact all the way through. The U.S. Treasury is based on the dollar and the full faith and credit of the U.S. government. If suddenly all those countries decide to begin to dump the dollar.
Or dump the bonds that they're holding, right?
The bonds that they hold. 30% of the U.S. Treasury's $10 trillion are held overseas.
And so if that starts to dump and then companies start to dump.
If they dump and the price starts sinking,
now
institutions will dump.
Right. And so that comes to the point, if they passing this June, raising the debt ceiling, if we default, if there's this fight and we ended up defaulting, that could cause a huge ripple.
it does cause a huge ripple.
You remember back in 2011 when they thought, and they downgraded the debt of the U.S. government, and so every company that is AAA rated then got a downgrade because you're no longer AAA.
Yeah, I mean, there's implications of this whole thing going on, and we raise the question not because it's fun to talk about, not because it's
Well, it is fun to talk.
well, it is fun to talk. But because it has significant implications for investment and for what's going on in the marketplace. And it's better to prepare for the worst and hope for the best, but it's best to be prepared for what might happen.
Yeah, and we talked about the oil prices a little while ago, and we're trying to refill some of our strategic reserves now. But we have a price target of about $64 a barrel, and now it's up. If we see $100 a barrel oil, how does that change?
It does change things.
But I read about a company today, Mike, that said they have a high probability they're on that there is a place in Texas that has more oil than Saudi Arabia.
Really?
Yeah. Yep. They said if they can get to it, they have a high probability. They think they'll be able to get to it. They believe it has more oil than Saudi Arabia.
That would be very interesting.
Yeah.
I mean, even at a time when, oil demand is beginning to shrink and will shrink over the next couple decades, still there's going to be a significant demand for oil. And as growth continues, there's a tendency for using less oil, but a greater demand. And, one thing I read recently is that last year, solar produced more electricity than oil. We're seeing a change.
No question about it. That's the direction we're going. You and I argue over this all the time, but I think it's a more gradual decline in oil. But it's interesting to see where it's going to go.
It is. But it also puts a lot of pressure on a number of these countries that we're talking about because they're oil dependent.
Mm-hmm. Gas and oil. I think the stands are really dependent on natural gas.
Yeah. And so that means as the world begins to shift away from that shifts away from their economies. And they haven't been able to really diversify their economies.
No, look at Russia. It's totally dependent on two products. Oil, which is oil is not very great. It's not the sweet crude. It's I forget what we call it. Heavy.
High sulfur.
Yeah. So, and then natural gas.
Yeah. And as that demand begins to trickle down, and you have to wonder about what happened with Saudi Arabia, is if we're not starting to see a surplus of oil come into the market and see the 1 million barrel cut per day, if it's not partly that and partly the Chinese pushing to see if they can't drive up U.S. inflation. Tit for tat.
Yes. But, the world is changing. We're seeing these blocks. And then, just to throw in there, I know it's probably not related, but the issues going on in Israel, not really related necessarily, but just causing more friction in the world that the one democracy in the Middle East is right now is almost splitting apart in the last 3 months.
It's been a fragile thing for decades.
It has, but it's really come to head. I was talking to a friend of mine who grew up there when we were talking about it, and he made an interesting comment. He said before Anwar Sadat died, the leader of Egypt was assassinated. He says, well, don't worry about Israel. He said, just give them 30 years without a war and they'll destroy themselves. So he said to me, Sadat was right.
I mean, as long as they have somebody from the outside,
But just think how that will change the makeup of the Mideast. That turmoil, they're moving to countries, blocks are moving. Iran and Saudi Arabia, China, several other countries are moving to developing a currency to move away from the dollar.
It could have a dramatic impact.
I mean, we're looking at serious world destabilization and moving towards, is World War III coming?
Well, I'm not sure that it's World War III, but certainly a world economy.
Well, that's what I mean.
At war.
Maybe not necessarily a physical war of armaments, but an economic war.
Yep.
Which then doesn't take much to lead into fighting. Who knows?
It's a very interesting time, and it's a time in which, for investors, it's important to be aware of what's going on in the world. It's important to be aware of what's happening, not just in Washington, D.C. with the debt limit, but what's going on in the rest of the world, which could affect the U.S. Treasury, the U.S. dollar, and the sales of U.S. companies abroad.
Yeah, I mean, we just saw, Macron and Xi getting together.
Yep.
We'll move into a commercial. We will pick this up when we get back.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike and Al.
So, Mike, we were just talking about Xi and Macron getting together. And there's been some speculation that Xi is trying to divide the West by making deals with France. And, I think he's buying a lot of Airbus planes.
Mm-hmm.
But another company that's trying to do some dividing, the United States believe is TikTok or ByteDance.
Yeah. So what's going on?
Well, apparently we had a congressional hearing last week with the CEO of TikTok, and he wants to, the United States wants to ban TikTok. They believe there's some spying going on and disinformation, and he sat up there defending himself, but apparently he wasn't very convincing.
I watched a little bit of that.
I did too.
He wasn't very convincing.
And they want him either to ban it or divest of it and sell it to a U.S. company, which is never going to happen.
And they have a lot of reach, especially into young people.
Mike, let me give you the numbers. People spent 53 billion hours last year on TikTok. 53 billion hours, okay? And they, what are we doing now? We're trying to speed up baseball games because people said they need to get out 20 minutes early. But we spent 53 billion hours on TikTok.
Well, that, if they had 20 minutes less to watch baseball, they could spend 20 minutes more a day on TikTok.
There you go.
53 billion hours.
Yep. That was the numbers I read.
And to have a TikTok account, they have your information, right?
I believe so. I don't have one.
I don't either.
But it's all people. I'm Generation X. You're the. Do they even have a name for your generation? You're before the baby boomers.
I'm before the baby boomers. I'm the old guy.
But if you look at it generationally, you'll see that it's the younger generations dominate the use of TikTok.
So I did have a TikTok account. I tried to stay up with some of the technology, but there is so much push coming. It's, talking about data. There's the push and the pull. Pull is when you go looking for data. Mm-hmm. Google search is pulling information out. Pushing is when they push information at you all the time. And I don't know, I had the account for maybe 3 months, and they kept pushing stuff at me all the time. And it got to be so egregious. I didn't want to see girls dancing. I didn't want to see dogs jumping through hoops. I didn't want to see magicians doing tricks and those sort of things.
But people have made businesses off of this.
I know.
Businesses, musicians have launched their careers on this site.
I understand that.
It's fascinating from that perspective.
You have singers, you have all those people that are doing that. But the aspect of it being pushed out rather than pull, it just got to me that, it just took up space on my phone. And it's been gone for a few years. But it's been really effective in a lot of ways. You think of the Trump, what do you call it, when he has a big thing?
Big rally campaign?
Big rally, the Trump rally.
Yeah.
Where they thought they were going to sell so many tickets, and somebody got on TikTok and ordered with TikTok friends, ordered 1 million tickets, and nobody showed. That's, it's funny, it's ironic, but it's also damaging. And when somebody's counting on a group of people showing up or putting out something and nobody shows because it was just falsified, that's really wrong too.
I caught the part where the Congress was critiquing some of the videos on there of a girl committed suicide, and then the spying, and then they think this harvesting information in China. The government of China has access to the information, which I wouldn't doubt. Why would they not? They own it. They own a stake in every company. We saw what happened to Jack Ma when he spoke out, the CEO of Alibaba. We didn't see him for 3 months. He went to a re-education camp.
Well, and we know on TikTok, the Chinese government in 2015, when Snowden took all that information, China reached a point of almost frantic fear that people would steal their national security information.
Yep, right.
So they set up the China Internet Information.
And they block people in their own country from internet access.
They do.
And they use all this information, like banning them from the chips that they need for artificial intelligence and all that. They're not only going to use it against us, but they're using it on their own people. And the spy balloons that we just knocked down, they dissected them and realized they did have spy capabilities. They were sending information back.
Yeah.
They weren't just anonymous balloons like they do in New Mexico. Isn't that where they have the big balloon parade every year?
Albuquerque, yeah.
Yeah.
No, but with ByteDance, which owns TikTok, the Chinese government set it up so that every internet company has to have a board of 3 people, and one of those 3 people is appointed by the government. and the government has the right to buy a significant amount of the stock at a huge discount. And for the founder of ByteDance, who owns TikTok, he was removed and replaced by a Chinese government official. So, I mean, even TikTok, it's not an independent company. The head of the company is a government official who came out of the propaganda side.
None of them are like they do everything through, like you've mentioned many times, Sri Lanka, the hamband totem. It wasn't the government. It was companies that were supported by the government and money funneled to them to do this.
Yeah.
And they say, oh no, it's just we just want to own the port and pay us back. But then all of a sudden, the picture I saw is a picture online of a huge Chinese military Navy ship in Hambantota.
A quarter of their Chinese Navy is harbored there.
And then when Greece is, if you don't know, there's 20 ports around Europe that Chinese have a hand in. All of them have a significant portion of some of them, and specifically in Greece where they own the port outright. And they said, oh, we just want it for logistics. Well, that same thing happened. All of a sudden, a military ship shows up.
Yep. I mean, China wants to dominate the world. They want to replace America as the most dominant nation in the world. They want to do it in terms of technology-wise, economically, and politically.
And I think it's scary countries wanting to get in bed with China and create that currency. And here's why, because none of them have the strength, the people, and the economics. Maybe India, when India starts to come up, might have serious competition with China. But I wouldn't want to be one of those countries and be beholden to China.
But China brings a lot of benefits to those countries. They bring a big market. They bring trillions of dollars to invest in the railroads and the airports and the ports.
We've seen what happens to them. We've seen what happens. They stranglehold the country and then take the country over. They're doing it all over Africa.
Yep. And now they want to move into Europe.
And they've already have with the ports, but they haven't moved mainland. But who the heck knows?
So it's a situation to be aware of. It can have an impact and will have an impact on investments and on what happens with the dollar, what happens with currency. All of that is happening today. And for the people that are looking in the rearview mirror and thinking things are rosy for the United States, actually, I think things are rosy for the United States, but not like they used to be. Things are changing constantly, and we need to be aware of it. As investors, we need to be aware of what's going on. That's what this program is about.
I agree. Things are changing rapidly, but I'll agree with Warren Buffett in his last letter. I'm still not going to bet against the U.S. economy.
I wouldn't either.
I think that we're still so dynamic compared to those economies that, and right now, as we see, the consumer is still keeping this economy alive. Name me one of those countries where the consumer is keeping their economy alive. Even in Europe, the consumers are not keeping their economy alive.
No, the U.S. is truly moving. And did you see the Walmart news?
I saw it.
Walmart is reducing their hiring.
They said robots are going to take over, Mike. All the palleting, all the palleting and all this stocking is going to be done by machines.
Yeah.
And moving in that direction.
So we're coming to a commercial break. Don't go away. We've got more to tie up these ends. So the idea of this program is to bring you insight, to put you ahead of the curve instead of behind the curve. These are things that may never happen, but there's a significant probability they could happen. And when there's a probability that they could happen, we want to give you, the investor, the understanding of what's happening so you're not blindsided, so you're not left behind and suddenly things are changing. The idea is to give you insight and understanding of where things are going and what's happening so that you can be ahead of the curve, not behind the curve. That's the focus of this program. We talk about things. Some things will never happen. Some things will happen. And that's what you need to be aware of. Our idea is to prepare for the worst and hope for the best. It's a big difference between hoping for the best and getting hit by the worst. And that's why we're on the radio, to give you information. We'll be right back after this commercial break. Don't go away. We need to wrap things up. You want to hear the rest of what we have to say.
Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike and Al, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team, Mike and Al.
And it is Saturday, and we're talking about money. Really talking about money. We're talking about the U.S. dollar and the U.S. Treasury and maybe another currency. You know, for almost 100 years, the dollar has been the standard for trade, where 96% of all international transactions, all trade transactions, are all done in dollars. The Treasury is traded 24 hours a day, 7 days a week. It's the most traded security in the world. It's used to back foreign reserves. Foreign banks, foreign central banks use the dollar as their reserve currency. So what is it now that we're beginning to hear about a new potential currency, a desire on the part of a number of nations to create a new currency to compete with the dollar? We're going to get to that later in the program, but how did the dollar get to be the currency? Remember, the United States is a pretty young country, and prior to the World War II, the standard currency was the pound sterling, with the French franc and the German mark
before that was the Dutch guilder.
And the Dutch guilder. I mean, those were the currencies of the day. How did we settle on the dollar? You have to go back to 1944, end of World War II. The war was almost over. The Great Depression was in everybody's mind. World War II was in everybody's mind. Rebuilding Europe, rebuilding Japan, rebuilding a lot of the world that had been destroyed. All that was in everybody's mind. And they formed together representatives, 730 representatives from 44 countries, spent 22 days at a place called Bretton Woods. And they decided to hammer out several things. They wanted to do an international monetary fund, a national fund that could loan countries money and supply money for rebuilding. They wanted to build a world bank, a bank that covered the entire world, not just a national bank, but one that really covered the world. They wanted to develop trade and tariff regulations and rules so that everybody had that and you had free trade in the world. All of that went through. It started actually not with 44 nations, but it started with a few nations. The United States, England, France, Japan, and I'm leaving out a country, but I can't remember who. But anyway, it began there. It expanded to 20 nations and then eventually to the 44 to develop that. And the dollar became the currency of choice. At that time, the United States was running a surplus, not a deficit. England and France and European countries and Japan, those countries were running trade deficit. And so it was almost a natural that the U.S. dollar became the currency of choice, and the U.S. Treasury became the security of security. That sounds strange, huh? And as the United States rebuilt, the United States had the largest GDP in the world. And the U.S. Treasury was backed by the full faith and credit of the U.S. government. I think that's a key thing to keep in mind when we talk about the potential of a competing currency.
Well, we had 50% of the world's GDP at the...
We did.
And what do we have now?
20.
Yeah, because some of the articles I read about this competing currency, Mike, said that the countries that are getting together control roughly 33% of the world's GDP. Right?
They do. And they feel, well, at least a few of those countries feel that the United States is a bully.
Right. And the interesting and the irony in some of this is that they don't necessarily want it to be China, a Chinese currency. They don't want the yuan to be the replacement of the dollar. They want to come up with something different, it seems like, from what I see.
Oh, yes.
Right. They're not saying, hey, we want to move the United States aside and replace it with China. They don't particularly think that that's what they want to do.
But remember, China's yuan is controlled by the Chinese government.
Right. And
they move the exchange rate as they want to.
Yes. It's opaque. Nobody really knows what their economy does. It takes some, it takes strategists do some serious digging to figure out what their economy's doing. You can't, even now with coming out of COVID, we can't figure out what are they trying to do? What are they going to do as far as growth? Are they going to try to convert themselves to a consumer-based economy to compete? What's their plan? And
can you guarantee, with the full faith and credit of the Chinese government, the yuan?
Yeah, and we've seen what they've done with we've discussed before is their Belt Road and their initiative, Belt Road Initiative, and what's the other one they called? I can't think of the top of my head right now. But they're trying to put a stranglehold on ports around the world, and what they've done in Hambantota by basically repossessing the port and things that they've done, strategically placing these things in the Indian Ocean, which is a strategic trade place with India, which India is part of this, but they don't really have a great relationship with India.
No, but there was a formation of a group of countries. Goldman Sachs called them the BRICS, but
yeah,
it was Brazil, Russia,
India,
China, and South Africa.
Yeah.
Those countries did gather together and talk about a currency. China would love it to be the yuan, but it's not going to happen.
No.
But they've opened it up to, there's another couple countries that want to enter into discussions. Not Argentina. Australia. Yeah, they both start with the letter A. Australia.
And then all the stands want to enter, the Kyrgyzstan, Pakistan, and all these other. There's a few other ones I can't think of, but
the key one that wants in is Iran.
Yes.
And Iran doesn't want the Chinese yuan. They understand the issues with it.
Yeah.
They want to form a new currency.
And then the deep ties that we're seeing with China and Saudi Arabia wanting to replace the petrodollar with the yuan dollar, but from some of the things that I've looked at, that's probably not going to happen.
No, but a new currency, it's not an impossible idea.
And what are they going to back it with?
So if you look, the question arose, some 20 years ago? Maybe it's been 30 years ago? No, not 30 years ago, 20 years ago, that a number of European nations said, we need a common currency. Mm-hmm. France had the franc, Germany had the mark, Italy had the lira. I mean, it was like 1,200 lira to the dollar.
Right.
All those currencies. And they said, what we need is a standard currency for the entire European Union. And with the exception of Britain, they went to the euro.
Right.
It replaced the French franc. It replaced the German mark.
But as far as Europe, though, Germany dominates that continent.
Yeah, because their economy was so strong.
Yeah, and they tried to push, I believe, at the time for it being because they dominate. They tried to push for it being the German mark should be the currency of Europe.
And when they did the conversion from the local currencies to the euro, Germany got an advantage out of that. So did France. Italy paid a price. Greece paid a price.
Portugal and Spain, I think they all.
And, so in that conversion process, there were certain countries that were favored. But once the conversion was over, everybody had the euro. So the question that Iran poses is, can we develop a currency that would be common to a group of nations that can work? Mm-hmm. And entering into that conversation has been Belarus, Bahrain, the Maldives, the United Arab Emirates, UAE, Kuwait, Myanmar, Egypt, Qatar, and Saudi Arabia are all entering into those discussions. I mean, there was an editorial in the Wall Street Journal. You saw it. Or not in the Wall Street Journal, in Barron's.
Yeah.
You pointed it out, right? It said the yuan was never going to replace the dollar.
It didn't say never. It said it's going to be a while.
Yeah.
And I think that our other friend, Ray Dalio, said the same thing, but he said not till 2050. He thinks it's still going to be some time before the yuan's there to replace the dollar.
And I don't think the yuan will ever replace the dollar. That's my thought. But a new currency could very well compete with the dollar. And I don't think anything will replace the dollar, at least for decades. But those nations that we just mentioned control 30 to 50% of world trade. And should they form together and come together and form a common currency, that could actually compete with the dollar. And you have to think about the dollar and how we got there and what the logistics are. The monetary system's been described like a sewer with all sorts of pipes running in, and it all feeds into New York. Every major bank has a branch in New York for transactions and moving from country to country and doing all the trade. There's $4 trillion, over $4 trillion of trade that's done every single day, all in dollars, 96% in dollars, but essentially all in dollars. But that was an old time when data moved over wires. Don't go away. We'll be right back to talk about this.
Mike, we're talking about a lot of the changing world, the risks that's going on, and how that's going to affect the U.S. economy, U.S. stocks, how the Fed is going to react, and how it's reacting to all the change, especially with the slash in oil production and what's going on with the banks. How is the Fed going to keep positioning interest rates? I talked to a lot of people in the last couple of weeks, and this makes people more nervous, but they think, sitting in cash and money markets is the way to go.
It's probably the worst way to go. It's being in the wrong stocks at the wrong time is, of course, terrible, and being down. So I'm old enough, and I started in the business in 1986, just as we were winding down from the high inflation of the 70s. And I had a client that came to me. Her husband had died. He had an insurance policy. So she had invested. He died in 1978. I remember because I bought a business in 1970. And she invested the proceeds from the insurance settlement and completely replaced his salary. Everything was good. 1978. Invested primarily in bonds with a couple dividend-paying stocks. By 1986, just 8 years later, the bonds were maturing and being called away, and the interest rates at which you could replace them with were less than half of what they were in 1978. Income, less than half. Not only that, the purchasing, what you could buy with $1, had shrunk dramatically. So in effect, the income purchasing power of what she had 8 years after that time had lost 60% of its purchasing power. And she went from having an okay life in 1978 to not knowing when she was going to run out of money, but she was on her way of running out of money. And of course, I picked it up and for the rest of her life, made sure that she had enough money, and she continued to live for another 20-some years.
Nice.
But she would run out of money in 7 or 8 years. So thinking that you have a lot of time is not necessarily true. For her, it was 8 years to see the amount of purchasing power drop by 60%. And she had fixed investments. It could have been in annuities, it could have been in cash, it could have been in anything with a fixed investment. But because of the impact of inflation and because of the changing nature of the bond market, suddenly she was out of money. That's a situation which, when people are talking about being in the money market, they're losing 5 to 7% per year. It doesn't take very long for that to compound and put them down 50%. In 8 years, they'll be down 50%.
Yeah, I mean, and things are a little scary right now. The world is scary. We talk about another reserve currency that's going to compete with the U.S. dollar. What's that going to do to the price of the dollar? Well, the dollar could plunge, but still, if you're sitting there on the sidelines in cash, and I'm not saying don't have some dry powder. I mean, you definitely keep some cash, but if majority's in cash, especially if we're in the inflation like we are now, you're really not doing yourself any favor.
And in order to be in cash right now, you have to assume that the Fed is going to start lowering interest rates and inflation's going to go away. We're staying at 4.6%.
But what happened in 2008 when people sitting in cash and money markets drop below their net asset value? Guess what happens? You lose money.
Yeah. So having some cash on hand is always a good deal. Having 70 or 60 or 50% of your money in cash or 100% is a losing proposition today. And if you look back at what happened from 1961 to 1979 and look at the impact of inflation, if you compare the consumer price index to the Standard & Poor's 500 with dividends reinvested, it took 32 years for the Standard & Poor's to recover what the consumer price index did. If you just invested in an index fund, it took 32 years. If you invested in cash, I don't think you still caught up. The dollar between that time lost 70% of its value. How do you ever really catch up from that? You don't. You just don't catch up. So being in money market funds or being in a CD for a portion of funds, that's fine. But for a majority of funds, you're losing money. It's just you're getting further and further behind if that's where you are.
Yeah, I mean, you and I were just sitting there looking for those stocks that are sort of indispensable in the economy that companies still need to spend money on.
Yes.
There's things they don't need to spend money on. If we're going to tighten the belt, like, okay, we don't need this, we don't need that, but this, we can't afford not to upgrade this when we, every year, every 6 months, whatever the time.
No, it's something where you need to be invested in the right stocks at the right time. And nobody knows exactly the right stocks at the right time. So it's finding those stocks that are going to significantly up, and a few duds will go along with that. I don't know of anybody other than Madoff who always picked the right stocks. And of course, we know the true story with Madoff. We use it as a joke, but that's really, nobody picks the right ones. Not Warren Buffett, not John Templeton, not Peter Lynch. We've all had losers. But the idea is to have some winners, which more than make up for that, and which keep you in the game, which keep you moving forward, that keeps you ahead of inflation, that keeps building a margin of safety so that when bad things happen, you have more than enough money. And we've been talking about inflation since 2016. And the concept was you'll have more money, and if inflation never happens, you just have more money than you need. The opposite, if you're not prepared for it, you're going to be fighting it the whole time.
Yeah, because we talk about oil price, but when the Fed sits down and looks at interest, that's not really something they look at because they look at the PCE.
Yeah.
And so that factors out food and inflation. So, this whole hiccup with lowering production, is the Fed going to factor that into their calculus when they go to raise interest rates again? Probably not.
Yeah. Up go interest rates.
But they thought, oh, okay, though this is going to kill technology stocks. But what have technology stocks done? I think they've outperformed, right? This is the contrarian view. They've outperformed everything else.
Yes. So technology stocks, they say that inflation picks up, and so that reduces the present value of earnings in the future. But it's better to have earnings in the future than to have nothing in the future. Anyway, we're coming to the end of the day. Have a wonderful weekend. Have a wonderful week. We want you to be understanding what's coming down the road. Be prepared for the worst, hope for the best. That's what we need to do. And things that have never happened before happen all the time.